Good morning, everyone. Good morning, good morning. Welcome to Thursday, the 28th of August. Happy month end. Hey, Ronan, Cisco, what's going on? Whew. Well, here we are again. Hey, Raj. Welcome, everyone, to the tradingsyndicate.org. I'm JJ, vwaptrader1 on X. Good to have you with us as we navigate and earn money from this crazy thing called the U.S. capital markets. Hey, Jerry, Jeff. What's up, Glenn? So Glenn's already short. We're looking for a short. Now, overnight inventory is long. Over 70% of the inventory is above yesterday's close. The market has been bid 84 for quite a while now, and then at 91. It's been bid the close since I woke up at 4 or 5 o'clock in the morning, London time. And we are in pure distribution of all of the stuff that the wholesalers had to take in yesterday. Under the close, we're getting rid of it above the close. So inventory is long, but when on correction, it keeps correcting lower but to higher levels. So you're getting higher lows. That'll be a level that we'll be watching on the open. If we take out the previous day's high and get accepted above 65, let's just call it 65.08. There's an old all-time high at 65.09. There's a stop up there. And if we blow that out, look for 65.15. Now, the downside is that we take out that 64.91, tag the close, and come and test the bids down here. We'll see what happens. It's going to be an interesting day. I will let the chart tell me what's going on. It is month end, so as Red Foreman from the 70s show would say, don't be a dumbass. Right? If you're unsure what's going on, size down. If you're really unsure what's going on and if you don't have a valid trade setup, just sit and watch. Right? You might learn a thing or two. Wouldn't that be a thing? Right? Instead of just losing money and blowing up accounts, maybe sit back and watch. And I know I say this a lot, and you guys are like, well, why does he always talk about people blowing up accounts? You should see the messages I get. JJ, I blew up my account. JJ, dear JJ, for Christmas I want $1 million trade, but oh yeah, I blew up my account. So, right, so just take it easy, right? You don't have to get all hyperactive, right? Month end is not a good time to be hyperactive. What's up, Phil? How you doing? Oh, hey VS Squad, what's going on? Have I had a chance to visit Grimsby? I have driven by Grimsby, but I've been told not to really pull in. I have seen the movie. But I have not had the pleasure of visiting Grimsby. I have been to Swindon. But I have not been to Grimsby. Okay. Ah, work. Back to work, right? I'm already in holiday mode. Look at this, eh? Guys, check this out. The wonder of electronics execution. Look at the lows. Look at the lows on these candles. Isn't this just something? I mean, you have 1, 2, 3, 4, 5, 6, 7, 8. 8 candles with the exact same low. Right? Electronic execution is the most beautiful thing. Now, how do you put that into practical information that you can use? That's like great, JJ. It's got a nice low and it's a pretty little chart. What that means is don't short it there. Right? And if you're going long, that's where you go long and you put your stop here at 97 3/4. So that's the practical information, because if you're going long 99, 98, you see that they don't need to sell it under 98.5. Right? When the sellers don't need to sell it under 98.5, they're going to turn around and sell it higher, because that's how commerce works, right? If you see people lining up outside the store to buy, you raise price. If you see people walking back into the parking lot and getting in their cars, you chase them out the door and you lower price. Right? So that's the beautiful thing about electronic execution. And what a simply beautiful trade that is. You're long 99, stop 98 or 97 3/4, right? Let them have a few contracts at 65.01, right? Put some out at 2, right? Let them just take it. Take it, take it, take it. You want one? Take it. Take it and go. Take it and go. Take it and go. Right? And you're just offering, they're taking. It's like the Bolshoi Ballet, right? Just poetry in motion. Right? You're long 99, 99.5, and you're just selling them at 2, 2.25. Put some out at 2.5. Right? Life is beautiful. You make 2, 3 points on 5 to 10 contracts, you're done before the day even starts. Thank you very much. Right? How simple is that? No DOMs, no whips and chains, no torture jungle, no torture dungeons, no footprints, nose prints, thumb prints, right? Just simple business, right? You know there's going to be sellers at 4. They were there before, 3.5, 4. Get off the train there. Take your money, have a Coke and a smile, right? Trading should be nice and simple and boring, right? Nice trade, Zeth. Beautiful. What if you lose 2 to 3 points on 10 contracts? Well, if you're building a position, Omen, and it breaks 64.98 and your stop is down at, say, 97, and you're letting that work for a little bit, you start cutting contracts right away. The thing is, if you're trading 10 contracts, Omen, you have to have an account that is able to bear the business expense of taking a loss on a little bit of size. The losses are manageable if you manage your risk with size. So if you lose a full 3 points on 10 contracts, it means you're not managing the trade properly. That's why I try and teach you guys to scalp and scalp quickly. So when you are building a position, you're not sitting there with your thumb up your nose wondering whether or not you should get rid of contracts. Right? Trading, right, is about reacting to change. We train ourselves with setups, so we train ourselves to react when a business opportunity presents itself. The risk management is built into the trade setup. This way, you're never sitting around going, what if I'm long 64.99 and it starts breaking that white line. I'm hitting accounts, yeah, right? So just like S-Pill brings up a point, right? You shouldn't be trading 10 contracts if you have a $2,000 account anyway, right? You have to trade the size that your business is capable of. And even if you had a $5 million account and didn't know how to trade, you might want to learn how to trade before all $5 million is gone, right? You've already done the risk math before putting the position on. Exactly. Now, there are some times you're going to get kicked in the teeth. And if your account is not big enough to handle that business expense, right, don't trade that size. Hey, guy, so what is the practical tradable difference between a poor low and an excess low? A poor low generally means, guy, now this is generally, and this is where electronic trading has changed things. Both lows are tradable. The poor low in the old days meant buying competition. But sometimes now with electronic execution, even if you have excess, that low can hold and you can buy it. What I do is I match those poor lows and excess lows against my balance levels and the edge of my levels or my discount level. So if they line up, great. If they don't line up, I'm more likely to take a long off of a poor low because the difference, the practical tradable difference is your risk. So if you have a low, let's go show you. Let's check it out. This is a good question, right? Where's a poor low? Okay, there's a poor low right here. Okay? Do you see this? That's a poor low. This is a low with excess. Okay? What is the practical difference between a low with excess and a poor low is when you have a poor low and you go long here, your stop is at a very tight place. Your risk is very manageable because if that low breaks, then the reason for being in the trade is gone. Okay? So here, where are you going to take the trade and where are you going to put your stop? So for example, if you're trying to buy this low, you don't have a frame of reference that is current. That's a current frame of reference because you have 2 half-hour periods to reference off of. Here you're out there all by yourself. Does that make sense? There's no frame of reference. There's nothing other than the previous day to use. Right? So let's split that profile. So say I bought this low in N at 64, 61, or 60. Where's my next structural place for risk? It is that J low at 57. So the stop between there and there is much bigger than the stop between there and there. Here your risk is 3-4 ticks maximum. Here, your risk might be 3, 4 points. Does that make sense? So the useful thing is your risk. Good question. It's about risk. Yeah. Most of the stuff that we do, Guy, is based on risk. If we focus on the risk and decent trade location, well, let me rephrase that. If we have decent trade location, the risk is less. Not always, because somebody can come along and just whack it. But generally, if we have good trade location, our risk doesn't have to be as loose. Would a poor low be on a candle chart? It's hard to say because it's a two half-hour candles. So if you could tell that that low is higher than that low by a tick, it's a poor low. It's harder to see it on a candle chart, but I'm sure you could train your eye to do it. Exactly. Exactly. It's higher because the shorts front ran it. Thanks, team. I don't trade off a half-hour candle, so there's got to be a way of marking it or something like that. I don't know what an incomplete auction is. I've never understood what that means because I've always been a trader. So when I have an order for 5 million shares and I've sold those 5 million shares, the order is complete. So I don't understand this incomplete auction business. It makes no sense to me mechanically. I keep hearing incomplete auction and unfinished business. And I think they have to do more with digestive health than actual trading. Right? Might be some time for some prune juice. Right? And I have never had anybody explain to me what an incomplete auction is. Single prints are a short position or too much supply. I don't know, OJ. But here's the thing. You guys love these terms. How the hell do you use it to make money? Okay, so let's say we accept the theory of an incomplete auction. What the hell do we do with that? What are you going to do? Where do you put your trade? Where do you put your stop? What's the business reason behind the incomplete auction? When you explain that to me, I'll be able to figure it out. But till then, I have no idea what these people are talking about. They also talk about liquidity sweeps and there's all these terms, but none of them are actually used in the business. If you actually worked in the business, you're just working orders back and forth, right? It's all just Class A gibberish, right? I don't use those words. An incomplete auction is not a short position. They're completely two different. That makes no sense at all, right? How about we stop trying to do a new thesaurus, right? And get to work and try and figure out how to trade this thing, huh? Right? Right? So how are you going to make some money today? Right? Incomplete auction is not in my wheelhouse, man. And I've talked about it millions of times. I'm sorry if you've missed it. Right? Just focus on your setup. My setup is juice. Right? If you want the juice, when it looks below and fails at an edge, you buy it here, you stick your stop here, and you sell it here. Right? And who cares if the auction is incomplete or not? You let other people argue about that while you take your money and walk away. Right? Don't waste all your time with all this BS. It is Class A gibberish. That's why people who talk all that crap never actually tell you where to take the trade. Right? We tell you where to take the trade and why. If you can't explain the business reason for the trade, I could give two you-know-whats about some term that means nothing to me. Right? And aren't you guys sick of all this BS? Aren't you sick of talking about all this crap and not making any money? Wouldn't you just rather make some money? I mean, that's why we're here, right? Just take the trade on the poor low, on the look below and fail. Right? When it looks below and fails, practice taking that trade 1,000 times. As you take the trade, you will begin to get skill in different types of price action, and you'll be able to discern the subtleties of that trade. Right? Remember, John Madden went to a coaching class put on by Vince Lombardi. Lombardi talked about one play for, what was it, hours? He talked about one play. I can talk about the look below and fail for hours and all the subtleties behind that trade. Right? It's my bread and butter go-to trade. So I don't care about unfinished business and all that BS and all that word salad gibberish, because I want to show people how to make a buck. And I think people are tired of talking shit and not making any money. I know I am. That's why I started the room. Right? Excuse my language. There you go, Alex. There you go. Right? Have a trade setup. Your trade setup is you're trading yourself to react to a business opportunity. Right? The risk is built in, right? The risk is built in because when the trade doesn't make sense, the business reason for the trade goes away, you hightail it out of there, right? So if I bought 64.99, 64.99 and a half, three quarters, even 6,500, and it breaks 98 and a half, I know I'm in trouble. If it breaks 98, I'm out of the trade, right? Because if I buy something at 64.99 and somebody puts it on sale for 64.97, I am holding inventory that is mispriced, and I need to get rid of it before all my capital disappears. And that is how you make money, right? So this way you can, you can like free your mind. Good. Just keep doing it. Do the reps now, OJ, right? You're building up muscle memory. You're building up your natural reaction to the trade, right? So you'll be able to do it like breathing, right? And the reason is when it starts going bad, you'll be able to start getting out of it, sometimes even before the stop gets taken. And that way you're a smart operator because you're managing your business expenses, right? Right? Focus on what's important, brother. Good stuff. Just keep focusing on what's important and ignore all the noise. Let's see if we can get down underneath 6,500 now. It's trading very, very mechanically in the last 2 hours. Very, very, very precisely, very mechanically. If you are taking a short off the open, right? Why am I talking about shorting? Well, because inventory is long. So if you're looking to short off the open, where is your danger zone? Right? Say you're short 65.01 half, right? That stop at 4. I wouldn't spend any more money than that. Right? Keep it really simple. Mark where the sellers are so you have situational awareness. Oh, come on. Why isn't that? Oh, come on, Sierra chart. Okay. Let's go see where VWAP is. There we go. I was talking to somebody earlier, and he was starting to do really well, starting to see things. And then I noticed him trying to change it. I'm like, don't change anything. Don't get bored and change stuff. Just keep working on that setup. Don't change anything. Do the reps. It'll pay off. Right? And that's what we teach at the Trading Syndicate. If you're interested in learning how to trade, Steve's got another special going. There we go. Let's see. Found some bids just at around 96. Look below and fail in 97 and 3/4. Getting rotation up. Looking for 65.04. I did not catch that long. That would have been a nice one. Somebody's short. It's a nice drive off the open. Taking the previous day's high. Run some more stops. The overnight high is next. And that all-time Globex high, that's a look below and look above and fail. If we accept over the overnight high, be careful, ladies and gentlemen. Be careful. Now we're getting into this gray zone. That's 8 times profit. Sometimes markets will push high even if inventory is long because they're taking advantage of the fact that so many people are trapped short, right? That's where they're covering. Look at all the size at the overnight high. Seeing sellers at 5. If you're shorting this, if we get over 7, watch your whiskers, okay? If you're short 5, 6, over 7, if it accepts, be careful, right? Put your bids in so when it goes down, you get hit, right? There's competition at 4, 4.25. Tough market to short. 1, 2, 3. And then just simple math. Whoop. Watching that previous day high and the overnight high. Right? If you are short, as long as you are underneath 7, you're safe. If this thing starts offering over 7, be careful. Right? There's a little push up to 6, 6.5, 6.75. There's 6.75. Flirting with that overnight high again. Now, if we take out 65.09, it's going to trigger some stops. Oh, I ran out of levels on the 15-minute chart. Crap. uh, 1. Stop short. We stopped short. 1 tick. 1 tick short. If we accept underneath 5, look for a break of 4. I'm short 5.75, covering at 3.5, 3.75. Ah, flat. That was quick. If we can't get above the previous day high, you're looking for down to the open. There we go. Short 3/4, covering 1, flat. There's the open. There's the overnight point of control. A look above and fail of 6 3/4 should target 97. But remember, we had all those bids at 98 1/4. Let's see if they hold. Thanks, Jeff. Found some buying at 6,500. A little bit of short covering. Let's see where they sell into it. All right, this is a big green short covering candle. See if we can creep our way back up to 4. Couldn't make it to 4. Rotating back down. Let's see if we can hold that 98 1/4 now. You're 28. Brother, you're not that old. You're doing well. Just relax, brother. Just relax. Just relax. Be easy on yourself. Look below and fail of 97 3/4. Once again, if you're long 98, 99, I'd be selling into the 6,500s. If you want to hold a runner, maybe 2, 2 1/4. Yeah, got it, Steve. Yeah. Okay, a little bit of chop. Sideways action. Not right now. I'm on YouTube right now, man. I'm doing a session. Yeah, trading from a position of desperation is difficult. It's you're putting so much pressure on yourself. Alrighty. A little bit of rotation now between 64.99 and 65.03. Not much to do. Hey, Jem, what's up? How you doing? Let's see if that A low. I'm looking to see if the low of the day here holds. Be very curious to see if we can get under 64.90. One particular interest to me is 64.85. Right now, we just got a rotation going. Sellers at 65.03. They stopped selling around 98.5. Ah, why 64.85? Because I saw some decent buying there when I woke up this morning. And it was a nice long all the way up. I'd like to retest that level in RTH. That shows me where the shorts were bid in the Globex session. Not a poor low, a mechanical low. Sorry, I know it's a nitpicky difference. A day's trading will have one poor low and one poor high. That low is a mechanical low, which is it's a little persnickety little terminology thing. All it means is that it's bid down there. And that's where you'd be wanting to cover a short or go long from. I found it this morning when I shorted and got stopped out. And I went, oh, hey, there's a bid down there. So in the old days, what we'd do is we'd short a market down to where it would stop going down, and then we'd cover and go long. A little harder to do in today's choppier market, but the principle is the same. The execution is a little harder. Rotations are starting to get a little smaller. Heck, we're only 15 minutes into this, Magilla. That's okay. It's a good trade, Omen. 65.03 short, 4 stop. You're covering at 6,500, 64.99. That's nice. That's textbook. Beautiful. Beautiful. Well done. I want to see where the shorts are bid, where they're really trapped. And we can't get there until we go a little bit lower. Do a little Jacques Cousteau exploration underneath 64.95. Right? Till then, we're just doing rotations. Here we go. Come on now. VWAP is what, still 94? Oh, we're underneath VWAP. Well, howdy do. All right, come on down. Looking for 93 and a quarter, folks. Oh, come on, keep selling. A little follow through is not going to kill you. Oh, great, it's on sale for a minute and a half. Come on. Come back down under 97 now. Short 98. Covered 96. I actually fat fingered that trade. I got lucky on my entry. It's only one contract. Looking for 93, 93 and a quarter. To the downside. More balance. There's 93 and a half. Couldn't tickle the quarters yet. A little bit of responsive buying there. I don't see a clear trade just yet here, folks. Oh, seller at VWAP, good to know. Some bids down at 94. If we get above 98, you look for 65.01. Yeah, I agree with Steve. You know, desperation trading, you're never going to make any money. Have a couple of sources of income, take multiple jobs. It's really the only way to do it. Otherwise, you're going to make bad financial decisions. We've all had to do it. Hell, I worked for a stock promoter that looked like Colonel Sanders. After 9/11, nobody would touch me. So I had to work for like some of the worst miscreants on Howe Street until I made my money back. One guy looked like Colonel Sanders. The other guy looked like the Grinch that stole Christmas. I always have besides jobs, Aaron. I liked having multiple sources of income. We're looking for the close, folks. Coming down now. I like having multiple sources of income because sometimes I suck at trading. I'm just being real. I'm being honest. Sometimes I can't see the market. Sometimes you have a bad week. I'd like to have another source of income. There's that bid I was looking for. House Street's Vancouver, Patty. There's that bid. Let's see if 85, 86 holds. Now be careful going long if 85, 84 breaks. Here you go. It's starting to creep up over 86, right? If you're long, I'm long 87.58, and I'm happily selling them here at 89 and a half. I've got 3 left. I've got 2 left. I've got 1 left. I am flat. Thank you very much. And that's the trade I was waiting for. Ooh. Right? Look below and fail. Couldn't take out the J low by more than 1 tick. Now my entry could have been a little tighter. I was a little high, but that's okay. I took it with some size and I blew it off. And I sold into strength. Seems to be holding for now. Yeah, and Patty, House Street is a shadow of what it used to be. Oh. Let's see if we can get the point of control to move down here. Where is it right now? Oh, it's up here. Let's see if we can get some absorption. 4,100 contracts. Chop, chop, chop. Now, do you guys think that 64.85, 64.84 and a half, do you think that's going to hold or do you think it's going to break? I think it's going to break now. So if you are buying it, be very careful, okay? Keep a tight stop. Don't go overboard. Now there should be a seller where there was support. Okay. Now we're looking for 64.80 and a quarter. And then under that, I've got a level at 79 and a quarter that I think might be responsive. Let's see. Back over 85. Let's see. We cleaned it up. Jeez, here we go. Do we have to get long again? I'll scalp this. No, not yet. Still a seller at 85, but no, let's see how aggressive they are, right? Because if we get some aggression at 85, we can short 84 and try and cover 82. Let's watch the aggression at 84. There we go. Come on. Right? Yeah, there we go. Covering 83. I'll take a point. I don't care. I'm not snooty. I'll take him at 82 and three quarters. I got two left. If I have to pay 83 and a quarter, that's fine. I'm flat. Right? You find a seller you short, put your stop above. Hey, Frost, you're back and forth. How you doing? You all right, brother? Some short covering here. Forex on one phone. Oh, you're trading Forex. That's a dog's breakfast. You're a better man than me, man. You're a better man than me. Let's see. We could buy. Oh, you dirty rat bastard. I had an 85 and a three-quarter bid in, and they wouldn't fill me. Now, let's see if we can hold 85. Oh, come on now. If it's too fast, just sit and watch. You can always replay the chart and slow it down so you can get a better sense of things, folks. There we go. Long 85.25. That's the trade I wanted. Selling them at 87. I'm flat. Hang on to that profit there, Frass. Hold on to that profit. Don't let that go. Nice work, Mike Z. Well done. If we clear 89, look for 91. Here we go. Here we go. There's going to be some sellers at 90, but that's okay. We got to clean them out. Oh, boy. I want a nice move under 86, then back up over it if I was going to go long again. I really prefer going long at an edge. Tomorrow's not a half day, is it? Anyone? You get lucky, could it be a half day? It's just wishful thinking on my part. Exactly, Slodbuster. There we go. Point of control move down. Good absorption. Looking for 82. Can't get down to 82 just yet. It's kind of choppy. What does it mean when the puck moves? It means the inventory from the higher levels has dropped down and is being absorbed at the lower levels, right? That means the cleaning process is working nicely, AJ. Look at that. Somebody came in for size, eh? Did you see that? A little bit of action. We have found some bids here, Omen. 84.85. Yeah, so the POC or the POC is the point of control. It's where 70% of the inventory is priced in the value area, which is essentially a fancy way of saying cost basis. Remember, folks, those who have the lowest cost basis win, right? Holding 91 targets 93. There you go. Can't take out the 92 halves just yet. A little backfill here. Right? You take markets up to create demand from 84 to 91. And you go back under 91 and you fill in that demand with supply. Remember, sell your contracts if you are long, right? If you are long this move, 88, 91, right? Sell into the 92s, sell into those 92 halves. Make sure you take your profits on the way up. It's going to be a little choppy. Right? I took the 91 long and I'm flat at 93. Same thing again. Look for VWAP. There it is. And folks, after next week, we've got some new stuff coming at the Trading Syndicate. I've been working on some stuff to help you systematically hold trades longer, uh, provided that you have the skill to do so. And we're going to be teaching those skills. Also in September, I'll be starting a new coaching class. If you're interested, DM me. Right? We can help with that for us. Yeah, you don't want to be holding four futures trades over the weekend. That requires an insane amount of capital. No problem for us. We'll check that out. Boy, it's choppy here now. What are you guys up to in the room? Everyone's quiet in this chop. Oh boy. Now it gets boring. Yeah, it's kind of hypnotic, right? Ready for a nap. Just kidding. Just kidding. Oh. Being awake 24/7 has its downsides too, Frass. Do it for 25 years like I did. It kind of wears you out. You done AZS? That's okay. Tomorrow's another day. That's the way to do it, Moran. Chill out and have some ice cream. Especially before a long weekend. It's kind of nice to coast into that long weekend. You know what I mean? See you tomorrow in Globex AZS. Hey, it's the last weekend of summer. You got to enjoy it, right? Can't be in front of the screen all the time. Way to go, all right. You're getting there. We'll just switch you to a funded trader account pretty soon there, brother. There's nothing to do here. I would not trade this right now. Oh, good stuff. Okay. I think we might have to go put this on sale now. Let's see. Every time I say that, it holds 91. Hmm. Aubrey, what's up? What's going on, Playboy? How's the City of Angels? Yeah, that's good thinking, all right. I think it's time to go test 85 again. Hmm. Anybody have any questions? Just be careful when you're trading this chop before the next 15 minutes. Seems to have a difficult time getting under 64.90. So make note of that, short sellers. Hmm. Now this is a tight rotation now. 90 to 93. Sorry, folks. I'm trying to figure out if there's anything worth doing here. Don't think so. Did I say 85? Yeah, I was looking for the close. There we go. Distribution, yeah. Quiet distribution. Yeah, silent lucidity, yeah, exactly. Yes, yeah. With billions of dollars transacting, nothing is random. Highs and lows are meaningful. There is no such thing as noise. I don't know where people come up with this. It shows a horrible lack of understanding of the mechanics of how order flow and transactions work. You understand, Guy, that the market is transactions. Do you think if I had $50 million that I would just go and randomly start taking trades? Or that algos would just randomly. There's a business, right? Like, and a business has an agenda. So the market is a place where you carry out the agenda of your business. Does that not make sense? There's no such thing as noise. Noise is noise is for people who say things like it's random. It means they don't understand what's going on and they don't want to tell you that they don't know what's happening. Right? I would rather say I don't know than to put it off as noise. It's very dismissive, and it shows a critical understanding a lack of understanding about how the business works. If you don't mind, could you show me a recent example of a look below and fail? Right here, my friend. Look below, fail. Look below, fail. Yeah, what you want to do is you want to come up with a setup guy that is based on a business transaction, right? Hey, Doc, you're back. What's going on? It's just simple business. It's as simple as that, right? Sorry, I'm just typing this out. Sorry. So we just train ourselves to react when the business opportunity presents itself. And the risk is built in. And then we use if-then statements to get us into trades. If the market looks below and fails 64.97, then we go long 99, put our stop here, and then we put our sell orders up. If those sell orders don't get executed, then we exit the trade, right? And we train ourselves. So we're never sitting there going, "Oh, what should I do?" Right? We train ourselves to react. We must train ourselves to react, friends. Yeah. Yeah, exactly. 100%, Steve. You have questions, folks? Sorry. I was looking after a couple of people in the room. Here, I'll post that 15-minute chart with my levels. See that chop. Good stuff. Well, folks, we're coming to the end of our hour. Thank you so much for being with us. Come visit us at thetradingsyndicate.org. We're having a big sale. Try it out for a month. It'll cost you less than going to McDonald's. Have a great trading day. Be careful out there. It's month end. Keep your head on a swivel and keep your hand on your wallet, folks. Thank you so much for being with me. We will see you tomorrow in Globex at 7:30 in the morning UK time. I'm going to go and try and get my 10,000 steps before my girlfriend kills me. Have a wonderful, wonderful day. Bye for now, everyone. Thank you so much.